Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate a daily income stream. My name is Matt, and in today's video we're going to talk about the trades I executed for August 13th. We're going to talk about the covered calls, the cash secured puts, how I chose my specific strike prices. We're going to talk about the strategic thinking involved with choosing those strike prices. Then we're going to take a step back. We're going to take a look at the last 85 trading days and make a determination. Hey, is running your own options trading successful? We'll take a look at some of the numbers that I have observed during my trading time. And then lastly, I'm going to talk about the trades I plan on executing for August 14th. Let's dive into it. For anyone that's a returning viewer or subscriber, you guys know me. The first thing I like to talk about is the account value. One, sign of transparency, and two, that's just the number I'm dealing with to generate my daily income. I have $178,391 in the account, which allows me to run about 3 covered calls of QQQ with my cash. And then I also dance around with a little bit of margin running cash secured puts. I'll dive into that when we get to the spreadsheet. All right, guys, we're going to start this spreadsheets off by talking about the last 85 trading days. I like looking at the holistic view and then going into the micro data once we hit the big picture. So for August 13th, we made $247 of premium. And I've already mentioned the account value in the previous picture in the Robinhood account, but in the last 85 trading days, I've realized $27,507 of gain. That's appreciation plus premium. And the reason why I like to track it this way is because this is what I'm going to have to pay taxes on. So it's easier just to track that number like this. And if you look at the gain from how much money I put into this account to what I have returned thus far, I'm up 21.91% since running my own covered calls and cash secured puts. I will always say this. I definitely got lucky because when I transferred investing from high income ETFs into running my own options, I definitely rode a big bull run, and we're still in that bull run, and I'm definitely taking full advantage of it. Looking at my trade win percentage, I'm winning 97.65% of my trades. Had 83 winning days, 2 losing days. The 2 losing days are a lot more memorable than the 83 winning days, and that's how people judge everybody in society. Everyone will make fun of someone's mistakes, but nobody really praises their wins. So that's kind of the same concept applies here. For the average amount of premium that I'm making per day, it's about $323.61. And if you look at that as a weekly value, I'm averaging about $1,719 per week. And if we look at that as a monthly value, that's $6,484. So we're doing pretty good. Just running very safe covered calls and cash secured puts. And looking at the average yearly premium. So this number is an estimate at this time because for the year of 2025, I'm not going to have a full 12 months of data. I'm only going to have about 9 months or about 8 months because I started in April. So I came up with an estimate based off of my trading performance. So the way I came up with this $89,000 is I took my weekly premium and multiplied it by 52 because we have 52 weeks in a year. So that number came out to be $89,398, and that's about a 61% return a year. And from what I've noticed and how I've been tracking these estimates, it has ranged somewhere between 49 and 66%. Looking at this weeks left, there's about 20 weeks left in 2025. So that's 20 weeks left of, racking in premium, harvesting premium. And based off of my trading performance, I theoretically should still make another $34,000 if the numbers I'm displaying here are going to stay true. If the market has a bit of a correction, these numbers are going to get cut. But based off my trading performance, these are what the numbers are. But ideally, what I'm aiming for is by $1,000 a week. That's a very conservative goal, and I've definitely been hitting it with relative ease most of the weeks. However, there are some weeks like, you make some mistakes where I haven't been hitting that $1,000 a week, but at least it's not negative. So I will take that as a win too. Looking at this goal, when I first started this trading back in April, my account was a lot smaller. It was in like the $86,000 range. I threw some money in a little bit later after that. And then, but the initial goal was about $29,000. I think that was like 30% return. And then we are about $2,233 away from reaching that goal. I think for 2026, I will be able to come up with a better goal because I didn't know how this 2025 trading was going to actually pan out. And it's honestly been going a lot more successful than I thought it was going to be. So I kind of kicking myself that I haven't been doing this, 5 years ago, but hindsight's always 2020, but the next best time to plant a tree is today. So that's why we're doing it now. And this is one of my favorite parts of the videos, is talking about the estimates, because you have to have somewhere to look forward to and something to kind of keep your, the light in the sky, kind of a guiding star, if you will. And so for me, basically these numbers are all estimates as of right now, but at the end of the years, I'm basically going to sell lock these. And as the years progress, whatever the numbers actually are, I'm going to input them into these sell blocks, lock them, and then continue moving forward. And then any year after the ones that have been sell locked are actually just going to be estimates. So at the end of 2025, whatever my income is going to be, or how many taxes I'm going to have to pay, I'll annotate these numbers, change the end of the year value, and we'll come up with some estimates. But for the end of 2025, based off of my current performance, I've already made $27,507. If we add that $34,000 that I'm estimated to make, that should be about $61,000, almost $62,000. And once I take taxes away, the end of the year account value would be $191,000. However, the whole point of me doing this strategy is so that I can find a mechanism so that I can stop working a W-2 and maybe replace it, or at least, find a job I'm more caring about or I'm more interested in doing, instead of just going after the paycheck, which is what I'm doing right now. So ideally in 2030, it's kind of what I'm shooting for. As long as everything stays the same, there isn't like a world war or like a huge market correction. I think by 2030 would be a good place to start looking realistically like, hey, do I still need to be working? Because if I'm making about $444,000 of appreciation plus premium, do you really need to work anymore? I already think that's enough money, but I'd rather have a surplus, because I will say this, even though we're making this, $444,000, because the stock markets are usually going up somewhere between like 8 to 15% a year, averaging it out over a 30-year period. Like, I'm definitely going to have to keep some of my money into the account so that it doesn't dilute, and so I can continue making this premium and then being able to live off of that. So I will have to figure out a strategy to, when I get to that point, to figure that out. But, every year that I continue to work, but then also continue to trade these options, which only take me about 15 minutes in the morning every day. Every single year that I continue to reinvest, the numbers just look completely just better and better, and it's actually mind-boggling. But yeah, that's kind of the dream scenario. Maybe one day we'll hit this $11 billion in the account, making $5 billion a year. And I keep saying this, broken record, but even if it's 1/10 of this number or 1/20th, I still think that's a win, because then I could, instead of waiting, till I'm 59 and a half years old, or there's some like strategies where you can, I think, pull the money out 55. Anyone that's like there, maybe you can throw a comment in there. But yeah, you can maybe pull out money at 55. I'm 31. I don't want to wait until my health is, I'm 20 years old, or I can't hike as much, I can't run as much, I can't lift as much. To me, that doesn't make sense. I'd rather make the money now. Maybe I might not have as much later, but I'd rather use it when I'm healthier and more able-bodied. Cool. That's kind of the overview for those numbers. Looking at the weekly tracker for this current week, starting on August 11th, we are already at $1,396. Since last week, we had to reset the 4-digit club counter. We are hitting 4 digits again this week, and it's half the week is already gone. We still have 2 more trading days. Let's see if maybe we can hit that $2,000 mark. That would be fantastic. For the monthly tracker for August, we are looking like we have $1,579. And for the yearly tracker, we've already mentioned this earlier, I have made about $27,507 of gain. So that is pretty good. I'm pretty happy about that. Now let's get over to the other side of the spreadsheet and talk about the trades I executed. Going to be very simple compared to what I usually do. Here we are, August 13th. I ran 3 trades. So I had 100 shares of QQQ that I kind of kept on the sidelines from yesterday that were assigned on a previous day. So I wanted I don't know why I didn't really run an option on it. Maybe I forgot, but I kind of kept it on the sidelines for a reason. And then, was it a bad move? Not necessarily. So I bought that QQQ shares at the 573, and the QQQ was trading when it opened at the 582, 582.09, and then it shows a strike price at the 582. I racked in $102 of premium, and then when the QQQ closed, it was at the 580.34. So I get to keep these 100 shares going to the next day. And the way I run my options, So I used to do like a 0.10, 0.20 delta, which means there's like a 10 or 20% chance of the option executing. And for some of the more simpler types, that's usually like $5 away from where the market was trading at the time. And I liked that. I can definitely see myself doing that when I have a bigger account and I'm more so not trying to sell as much, not have as much turnover in my account, having my shares assigned and me getting assigned shares and then like rinsing and repeating. So maybe once I start getting into a more stable format, my account size is getting a little bit bigger. I might be choosing deltas in that range, but right now I think I hate to say, guys, I'm a slave to the premium right now. Any time where I can get about a $1 to $2 away from the current at the money price that's above my cost basis, I'm pretty much going to start choosing that. Usually that's like a delta between like 0.3, 0.4. I more so identify like, hey, is the market green? That's kind of market green, might choose $1 or $2 above. The market's red, I'll definitely choose a little bit closer to the cost basis I use. And yeah, like I mentioned, for this covered call, I bought at the 573. So I've already made $700 of appreciation just from this option. And then I chose strike price at the 582 because the market was at the 582. I was ready for this option to get assigned and then buying back in the next day. But end of the day, expired worthless, bagged $102, easy day. And then I ran 2 cash secured puts on the QQQ. One, I chose a strike price of the 581 and one of the 580. And both of them actually hit those specific strike prices. So now I'm going to get assigned another 200 shares of the QQQ, one at the 581 and the one at the 580. So what the plan is for tomorrow, I just will do at the money covered calls at the strike prices, maybe 580, 581. I might do one at the 580, one at the 581. And then for this 573, I might just do at the 580. So that's kind of what the plan is for tomorrow. That's like the mentality I like to use, $1 or $2 away from at the money above the cost basis, and then just rinse and repeat. And honestly, like once I started doing that, my premiums have just been skyrocketing. I've been getting a lot of gains. When I was doing the other way, I was more so trying to capture the appreciation. I think that worked at the time because when I first started back in April, I wanted to make sure that I wasn't going to miss a major jump from recovery after like the tariff time and the tariff talks. So I definitely was striding for more so appreciation gain than I was premium. And then once the market is like starting to hit these all-time highs and the markets are kind of steady, they're not really going down, it's a great time just to kind of cash in on the covered calls part. So that's what I've been trying to do, and it's been working out pretty good for me thus far. But yeah, guys, end of the day, $247. Let's head over to Robinhood. Let's take a look at what these premiums might look like, and then discuss the plan for August 14th. Here we are back at Robinhood. Like I mentioned, I have 300 shares of this QQQ. So that's why I plan on running just covered calls on. But let's take a look at my buying power and make a determination like, hey, could we do something more? So right now I'm utilizing all of my cash and I still have about $4,000 of cash left over. If I wanted to, make some random investment. Can't really do much with $4,000. So I'm pretty much going to leave it there. But because I have event contracts available, and so the way this works is for event contracts, Robinhood lets you run like cash secured puts using margin, but it's basically like a $1-for-1 dollar cost of your cash. So because I have like, somewhere around like $170,000 of cash, Robinhood's willing to give me maybe like, I think was it 80% of my cash value. Maybe it's not 1-for-1, but it's like 80%, but they're willing to let me borrow on margin $134,000, almost $135,000. And the way this works is you don't actually have to pay like you don't incur margin interest when running cash secured puts unless your option gets assigned. And what does that mean? Now you own the 100 shares of their underlying. Otherwise, you theoretically can use this money or use Robinhood's margin running cash secured puts without incurring a cost to you. So that's why I'm able to squeeze out more premium and then more money every single day, is because I usually try to max out as much cash secured put income as I possibly can. However, the flip side is this. Say the market does dip and then my cash secured puts get assigned. Then once this number is tapped out, then I will be using margin. So then I would be using $134,000 of margin, and I still would have $300,000 of margin left over. But at that point, I've already tapped out what I think is like, I start getting into the risky levels. Theoretically, I mean, I could probably buy 10 contracts or 10 or 1,000 shares of QQQ and just run covered calls on them, probably make a ton of premium every single day. But at the same time, it's like, how risky do I want to be? I have enough cash for 3 contracts, and then with the extra buying power, I could get probably 6 or 7 more. But at the end of the day, I want to be relatively safe and just build the right habits. Sure, I can squeeze out way more money, but at what cost? Like, if I'm not able to sleep at night because I max out on margin, and then say, I lose a job or something, or, the market just goes to complete trash, then I'm going to look like a clown because I overdid it and I should have just been a little bit more careful. That's kind of the thought process. Don't get me wrong. There's some times where, it might be good to surge, and there's some times where it's like, hey, maybe to pull back. That's why today I kind of pulled back, only ran 3 options, 1 covered call, 2 cash secured puts, kept it nice and simple. But tomorrow I'm going to run those 3 covered calls and then 2 cash secured puts. So theoretically, tomorrow should be a little bit of a higher premium, as long as the market or the QQQ is trading around like that 580 number and 580 mark. But food for thought. Don't get me wrong, guys. There's plenty of times where I just want to run those, 10 contracts, those 10 covered call contracts on the QQQ and just make a ton of money. But at the same time, I don't know, got to be careful. Let's head over to QQQ, take a look at what some of the numbers might look like. Trade QQQ options. Running covered call, we hit this sell call button, and basically this is how we run covered calls in Robinhood. Share price is this 580. So based off of what price I bought my shares at, so what was it? We had the 580, 581, and then 573. So as long as we choose strike prices above those cost bases, life was going to be pretty good. So for tomorrow, even though one of my options I bought at the 580, I'll probably just choose this 581 strike price, lock in that guy, and then maybe I might do 2 at this 581 and then 1 at the 582. So theoretically, just by running these 3 covered calls, I should make about $330. So that would be fantastic. Usually when the market opens, if it's like usually 25% less than what it's showing right now. That's kind of what I've noticed. But just from running these 3 covered calls, make some around $300. That's kind of the plan. Depending on what price you guys buy your specific, 100 shares of whatever investment, you run your options accordingly. I'm usually going to be choosing something, say the delta, like a 0.43 is like a 43% chance of this executing. For this 582 strike price, 0.33. We'll see tomorrow what the premiums look like, what the deltas look like. So that's kind of like the thought process, $1 or $2 away from what I bought in at. Look at the deltas, look at the premium. And at the end of the day, it really just boils down to like, hey, do you value premium or do you value appreciation? For my cash secured puts, I'll probably run 1 for the QQQ and then 1 for SPY. I don't always just like running everything on the QQQ. I kind of like balancing it out a little bit. The SPY is a little bit more expensive, and then you make a little bit less premium. So that's why I definitely am a little bit more biased towards the QQQ. Let's take a look here. Close this guy. Okay, it's 580. When it comes to cash secured puts, I definitely like going closer to a 0.3 delta. So yeah, I'll probably just kind of a quick analysis. This 578 strike price looks pretty good. And right now for a $94 of premium, yeah, that's solid. I'm definitely going to lock this up, no problem, for this QQQ. And then let's take a look at this SPY. Trade, SPY options, sell put. Yep. See here. SPY is trading at the 644.46. See what this 643 looks like. 0.31, about $78. Yeah, probably for the SPY. Just kind of a quick. This is how quick I run my options, guys. There really isn't much more analysis in this. Delta's at that 0.31. I like that delta. Usually it's like $2 or $1.50 away from the current price. So that would be a discount if it were assigned. Back $78 of premium. life would be pretty good. So between running my 3 covered calls on the QQQ, that's 330 plus whatever that cash secured put was, like $90. We're already at 420, and then plus 80. We'll keep it nice and simple. We're almost at $500 just for running simple and safe covered calls, guys. This is how easy it is. I will say this. I always recommend investing into good investments. There are times where you could probably invest or run covered calls on a smaller stock that's a little bit cheaper, and you can run more contracts off, and you probably can make more premium. But at the end of the day, you deal with single stock risk. I always highly recommend always invest in the good stuff. And if you can, invest into an ETF. I'm lucky I have an account that's big enough. Well, I'm not lucky. I worked so hard to make all this money so I can get here. But I worked hard so I can get this specific kind of account under my belt so that I can now run safe investments like QQQ or, SPY. But there are great investments out there. Like I highly recommend Oracle. I highly recommend Amazon. Any of the tech stocks, Nvidia, those are all great plays right now. They can make a decent amount of premium at the time. Some people are saying oh, it might be overpriced, but guys, guess what? It's the AI revolution and it's happening. Everybody's investing a ton of money. I work in tech, and just how much money they're putting into research and development, into all the stuff, how much chips they're trying to produce, all the different data centers, and how much power that's going to be needed for all these data centers. It's absolutely mind-boggling. So if you're trying to invest into tech, you're not going to be going in a wrong direction. And I highly recommend don't investing into speculative, invest in what's actually working. Nvidia's working, Amazon's working, Microsoft is working, Google's working, Oracle's working. Invest in all that good stuff, and you're not going to have a problem making tons of money with premium. So that's kind of my 2 cents. Invest in good stocks. From my pain points, don't really sell below your cost basis. I learned that through blood 2 times already, and I'm probably just never going to do that again. Yeah, and those are kind of the really 2 main points. You follow those 2 things, you're going to have a pretty good time running these options. Yeah, guys, that wraps up the video. Hope you guys learned something new. Hopefully you can adopt something to your strategy. Maybe you got a better understanding of how these options are run. I'm telling you, it's really that simple. Wake up at 6:30 Pacific time, run my trades within 15 minutes, because we kind of talk about it over last night. We annotate stuff, kind of have a game plan. Then it's easy to wake up and then just execute on the plan. So, and then I just wait the whole trading day. And then whenever I make my video at 8 o'clock, 9 o'clock, 10 o'clock at night, my time, then I'll give you guys all the details of the after action report, Yeah, guys, stay locked in, stay harvesting. Matt out. I will see you in the next video.